watching your ag commodity trade starting out the week here, and I'm joined now by Chris Swift of Swift Trading Incorporated based in Nashville. And thanks for joining us here, Chris, as we take a look at our grain trade. Let's start with this corn market and take a look at what the trade is doing at the moment. So far on the corn, we are still higher, but off of our earlier high by just a little bit. We're trading the July contract now 1 1/4 cents higher. We're at 3.20 1/2. And if you look at new crop December, well, it's trading a penny higher at 3.36 3/4 right now. Meanwhile, if you look at what's going on in the soybean trade to start things out here on a Monday, we have the soybeans showing July 7 1/4 higher now at 8.57 3/4. If you recall, we opened up a little over 9 higher. And we have November now 6 1/2 higher, make it 6 1/4 higher at 8.61 3/4. We seem to be eroding the market here a little bit. In the Chicago wheat, now we're mixed, and we're going to call July unchanged right now at 5.22. And in the Kansas City market, you currently have that July contract now down 2 1/4 at 4.77 3/4. So now all of a sudden we're on the low of the day and off of our overnight highs by about 9 cents. What's going on in spring wheat trade in Minneapolis? Well, here we're higher again, and we have July up 5 1/2 at 5.21 1/2. So let's start with the corn and soybeans here and talk with Chris about this. Small gains on the corn market here, but we have the big reports coming up tomorrow. And of course, today we will get our crop progress and condition report where we will get a planting progress update. I'm hearing, Chris, that some analysts are thinking we could be 3/4 done already on planting.
Yeah, with last week already being over 50%, that's not going to be hard to do. We had some really good weather last week, and it doesn't look like the cooler temperatures did much to the emerging crop over the weekend. So, yeah, it looks like they're going to get quite a bit of it in the ground. And so far from what I've seen this week, the weather forecast turns off awfully favorable towards more planting.
Have you been able to determine if there has been a lot of cash grain activity, cash grain sales here lately?
The only reason I'm going to say not is we looked at the rail loadings last week, and the rail loadings continue to be down significantly in the grain movement. So that leads me to believe that there's probably not a lot of movement around.
Okay, the new crop corn, the December corn, you can tell that it's still floundering around. It just hasn't really bounced much off of contract lows here recently. When you look at the soybean chart, on a July soybean chart, it looks like things are trying to bounce away from the contract lows there. Do you think at this point, when you have active planting progress like we are on the corn, that will help to stabilize the soybean trade?
You would think so, but I kind of doubt it. It looks like there's going to be ample plenty time to get both those crops in the ground, and not a lot of soybean emergence has taken place yet, so the weather over the weekend probably had no impact on it whatsoever. But it looks like maybe all these grains are just sitting here plateauing, waiting to see if they do get in the ground, and then within 2 weeks, if you got the majority in, they might unfortunately take another leg down.
Okay, and then, of course, we were talking about the Minneapolis wheat, that it has been trading higher in comparison to the Chicago and Kansas City market. It looks like, is this just a case of spread unwinding once again or not?
It's probably so. We're up a nickel right now. I'm showing in the July contract and 5 1/4 in the September. So those aren't very big gains. And no, I don't really have anything specific that says the reason they're up is this or that.
And a lot of times we like to see what oats are doing and just take a quick peek at those this morning. About 2 1/4 higher on July at 3.01 1/4, so over $3. All right, we'll come back and take a look at our livestock trade with Chris Swift right after this.
Right now, it feels like the world's standing still. But if you look to the land, it's a whole different story. From farms to backyards, wheels are turning.
And then up access.
We are talking 94 or 95. You know, Chris.
Day Report is brought to you by Roxor, a side-by-side vehicle unlike any other.
We are talking with Chris Swift right now. He's with Swift Trading Incorporated. He's based out of Nashville. And, you know, Chris, last week we had that cash cattle trade that started out around the $94 or $95 range, and we ended up at $115 by the time we got to the end of the week. So that was quite a surge right there. And then, of course, we continue to see wholesale beef prices, the beef cutouts making new records. I believe we made records for 12 days in a row. And then it was interesting when we opened up this morning, we can take a look at our live cattle market here. On the nearby contract, it opened higher, but all the deferreds were weaker. Well, now we even have the nearby June has turned lower, and we're now at 94.58, so we're down 8 cents. And we're about $1.50 off of our earlier high at this point. Now the August is down $1.38 at 98.83. So what is that telling you here about the open on the cattle market here this morning when that nearby June gave up?
Well, a lot of it is still a very bearish environment. We've still got a tremendous amount of work to do to get rid of these backlog cattle. And we did notice that last week's kill was about 10% better than the previous week. This week's kill should improve a little bit. And going forward, we should improve just a little bit. But it's going to take a while to not only get back to where we were pre-COVID kill levels, but then we've got to start working on that backlog.
Let's look at the feeder cattle market then. And on the feeders, you have the May contract down 238 at 125.53 after a high of 128.25 earlier today. That's a dramatic turnaround. And August is down 192, and that's the smallest loss of all the feeders right now. Most of them are over $2 lower. And then you have the lean hog trade. Currently on the lean hogs, you have the May down just one tick at 67.28. And you have June up 32 at 62.02. All the deferreds are about 40 to 80 cents lower, though. The hog market here, what's the makeup of the cash hog trade at this point?
Actually, it's improving just a little bit. So we know the slaughter levels are picking up considerably faster in the hogs. And because that hog future has a portion of the lean hog cutout in it, or has the carcass cutout in it, we might see that the increase in slaughter levels begins to bring that cutout price down just a little bit. So I think that's why we're seeing the futures carrying even discounts to the index right now, why they're not any stronger than what they are.
Very good information. Thank you, Chris, for talking with us. Much appreciated. Chris Swift of Swift Trading Incorporated, and he is based in Nashville, Tennessee. So with that being the case, Janet, I will kick it back to you.
All right. As always, thank you, Marlin.